Malcolm Graham Wood, and welcome to my CEO interview on Core Finance TV. Today, my guest again is Colin Harrington, CEO of Zephyr Energy. Welcome back, Colin. Nice to see you again.
Nice to be here, Malcy. Good to be back.
Good stuff. Well, you've been busy. You have been very busy. Well, I saw you, and the share price has been anticipating you being busy. So we'll talk about that. But I was delighted to see yesterday that the hard work that you've been putting in has led to, for a company, given where you were 3 or 4 months ago, a very substantial further raise in the London market. I guess that, to be honest, most people watching this will know the background. So, and anything they don't know, we'll be going through over the next few minutes. Why don't you start by telling us about the raise yesterday? First of all, just the nuts and bolts, the discount, and who came in and all that sort of stuff.
Sure. Yeah. So we raised yesterday £10 million. The pricing was done really where the closing bid was on Friday, but at about a 2.5% discount to the last trade. And yeah, great support from existing shareholders. We cornerstoned with a number of really good institutions, both existing holders and some new ones that have come in alongside of us. And so I'm thrilled with the lineup of investors we have in. We thought we had a great reception to it. And it's been wonderful to see the share price response in the last 2 days as well. So, I might, and I know we all have a tendency to overuse the word transformative at times, but I think, what we're trying to do here is truly transformative for our company. And that, involves both the amount of cash we raised yesterday and the assets that we're going forward with.
Great stuff. Well, under the proceeds of the placing, it comes out as being, you say, transforming is the word used again, transforming the company into a self-sustaining platform for organic growth. And you've got a diverse portfolio of production assets in 2 USA producing basins. Now, first of all, I guess that whatever happens on the back of which we'll come to in a second, is that the first thing is you're going to fund the Paradox lateral well. Is that right? That's
right. And the Paradox is our clear focus. This is the core of our company. It's what we perceive to be the jewel, and it's where we are spending all of our time operationally. So the most important thing for me as I looked out at this year was getting the Paradox lateral funded. We drilled a vertical well to get data in December and January. And we made the decision mid-March to pursue a lateral from that same wellbore. And the reason we did that, we got a lot of information and tied it with other information that we've had. And that information was extensive log data up and down the Paradox reservoirs, but primarily in the Cane Creek, which is the prolific one near us. So that log data you can tie really easily to the field just to the south of us, which has produced a lot of oil over the years. And we could see that the log responses were almost mirror images. They were exactly the same as the field to the south. So combining that with the core data and showing that we have oil saturation across the Cane Creek Reservoir, and then tying it into our seismic and all the analogous production data nearby, led us to say, yes, these are big checks in the box. We need to get this well drilled.
Good stuff. And before I go on to the back end, I mean, it isn't only the Cane Creek that we're talking about. Obviously, you've mentioned that as your sort of key and only target right now. But in the statement, you say you've got an additional 11 reservoirs in the Paradox. That's a lot of further work, or is there already work done on that? I mean, talk me through that lot.
Yeah, well, this is why I got involved initially, and this is why I've been so excited, is the Cane Creek is a huge resource in itself. And, work done before we had any of this data, Gaffney Klein in 2018, showed a 2C estimate at $60 a barrel of 160 million of PV just in the Cane Creek. So that's, pretty exciting, and that's easy to determine, relatively speaking, versus, what the fields look like to the south. But you're right, we have on the seismic these 11 overlying reservoirs that look interesting. We got log data back, which, again, made us, gave us some positive evidence for the potential there. We had, drilling gas shows as we went through those reservoirs, so evidence of hydrocarbon charge. And now we're tying all of that together with 31 sidewall cores that we took. And it's a lot of work. I mean, this is exploration. This is not been targeted historically. So we don't have any analogous production of the King Creek field like we do in our King Creek Reservoir. But that being said, we're doing a lot of work. We've got a huge team between the University of Utah's Geosciences Institute, our group, Department of Energy, and we are evaluating what could be significant upside. So it's another bite at the apple, and it's it definitely gets me highly interested there as well.
Well, that sounds great, and you're obviously going to drill that. We'll come back to timing in a minute. But the second thing is that you've made, or you are making, because you're not completed yet, an acquisition of interest in the Bakken Formation in North Dakota, for which you say you're going to get production and immediate and substantial cash flows, which will fund multiple additional Paradox wells over the next 12 months. This sounds like quite a bit of acreage you bought here.
Yeah, well, actually, it's not acreage. These are interests in 5 wellbores. So, and that's important because it kind of clearly defines what we'll be getting here. And we did this not as a diversion from the Paradox, but really to have a cash flow engine to help fund what we want to do in the Paradox. So you're right, it's 5 wells. They've all been drilled, so there's zero drilling risk. These are, long lateral horizontals in the Bakken. Great operator in Whiting Petroleum. They control about 8% of the overall volumes up there. Really core prolific basin. But we are buying non-op interests. There was a non-operated interest holder here who didn't meet any of its capital obligations when these wells were drilled, and we are stepping into those shoes. So for a very nominal acquisition price, we can step in. We negotiated this at a time when oil was at $45, and we liked the deal at that point. Now here at 60, it's kind of amazing to me that we can pick up drilled wells. One is already online, and it kind of 40 to 50% IRRs rather than what you'd expect to have PDP well acquisition for.
And it's the fact that, it's interesting that Whiting, for example, didn't even themselves take the extra interest. But is that because, as we keep reading, is that the US companies, the drillers, they're not drilling out, or if they have got prospects, they're not increasing their scope in those areas.
There's a huge amount of distress here. I think Whiting is undertaking the process, and they would have picked up these interests had the bills remained unfunded. So they could have foreclosed upon this. We stepped in ahead of that and have the ability to do the deal. But for a lot of these well-capitalized companies, last year they drilled a huge number of wells, but decided not to complete because they didn't want to bring production on it for zero. So now the low-hanging fruit for companies like Whiting and some of the other bigger independents here is, rather than drilling a whole host of new wells, just completing the wells that you've already drilled. And that's really where capital budgets are going this year.
So just drilling out the ducts, or just bring the ducts onto production there.
Exactly. Yeah.
Upside for this is presumably what you can see in the number of wells they're going to drill. But you've also got quite a substantial portfolio of some $16 million worth of tax losses in here as well. Where does that come in?
Yeah, so that's that's part of the beauty of getting producing assets or near-term production, is that there were from the Rose Petroleum days about $16 million of tax losses. So that effectively shelters the first $16 million of income that we have from paying that federal tax. So it's another nice upside here. It'll make the economics look even better.
So this is so interesting. The obvious question is, are there any more of these around?
So we have a great set of boots on the ground in North Dakota. We have a very, very good partner there. And we will look for other things. I think, to be honest, I love the package that we put together. It provides enough capital over the next year to do a few more wells in the Paradox. We'll have our hands full doing that. The Bakken non-op interests, as we've talked about before, they're not going to take a lot of management time. It's more accounting and governance. So, from that standpoint, it doesn't draw a lot of time in. But we will look if there are other things like this that, don't distract from our focus, don't take away from our drilling budget. Certainly, we'd look to see if there are other tuck-ins doable.
Good stuff. So let's have a quick look at the time flow of the timeline of news flow we're expecting, because we're expecting back-end production and revenues. We're expecting the drilling of the State 16-2 lateral well, and therefore production in the Paradox and so on. So give us an idea of when we're going to expect all of those things, if you wouldn't mind.
Yeah, so the next near-term item is we will complete this acquisition. We will be getting onto Whiting's books and paying the CapEx. And as soon as we do that, we will become a producer from that first well in the Bakken. We'll average about 85 barrels a day for the next quarter from that one single well. And then we've been told by Whiting that the schedule to complete the other 4 wells is early May, which means they'll be producing by June, and revenues from that will be flowing to us by August at the latest. So, nice near-term news flow from the Bakken alone. But really the exciting stuff is, we've talked about before, is in the Paradox. Yeah. We are full speed ahead with the preparations to drill the lateral. So, everything from awarding rig contracts, getting permits, and finishing that work and spudding by July 1st. That's really where I would like to be with this. And in addition, as we've touched upon, we are undertaking really detailed analysis on those upside reservoirs. We'll be able to talk about those later in this quarter. And again, there's the potential, given the cash flow that we'll have from the Bakken and hopefully from this first Paradox well, that if we would like to, if the exploration from those zones looks interesting and we elect to go after those, we should have the ability to try to test that at some point as well.
Yeah. Now, one of the things before we go, I know that you're extremely busy, but one of the things I wanted to mention was briefly was that I think you mentioned to me yesterday when we spoke, when you've been up all night doing the deal and everything else, was that you're possible that you'll be drilling the next well cheaper than you drilled the last well, when it's $65 now, and you drilled the last well at for 50 or whatever it happened to be. It's still as economic as that to drill in the drill as well.
Yeah, so drilling costs have remained low across the board, and I think looking at the Bakken statistics is a great example. There were 80 rigs drilling there last year, and right now there are 15. So there are a lot of rigs that are stacked, either cold stacked or are on standby. But the rig market for drilling rigs is still relatively soft. And we do think, combination of having, the rig we used last time still in the area, a number of other rigs, we're in the process. We will be getting those bids in the near term. So I don't want to make promises, but I do think this next drill, certainly has the potential to be cheaper from a day rate standpoint and a mobilization standpoint.
Well, the news is brilliant all round, Colin, and given what the share price has already done, and that you raised a lot more money at significant improvement to the last price, you're already doing well. I know that the market is very pleased with what's going on. Where do you see it from here? You've explained to me beautifully during this chat where you are, but run me through the next 6 to 12 months in a sort of quick timeline scales where you'd like to see Zephyr going.
Yeah, and I think, as I said in the press release, the board and I really think this is an unusual time, and the opportunities are extensive if you can grab them. We see that opportunity lying largely in the development out of the Paradox and really pushing that ahead at a time where costs remain low, but pricing seems to be strong right now. There's still a huge amount of distress in the U.S. sector. Capital isn't flowing in the small end at all. So, if there are acquisitions that make sense, of course, we would look at them, take them to our shareholders and pursue that. But really, I think the combination of what we're acquiring and what we already have, there's so much upside. There's so much drilling, so much work we can do there that even if it's this alone, I think we've got the ability to come out, we'll be averaging 720 barrels a day in the second half of this year from the Bakken alone. If we can hit the 2C estimates on our lateral, the production there, our IP rate is estimated to be 780 barrels a day. It's a big number. And wells in this area, when they hit natural fractures, Some have come below, some have come significantly higher. So we have the potential to have a serious amount of cash flow for a company our size by the end of this year. I'd like to be well over 1,000 barrels and have a long inventory to drill and to do this on our own schedule and under our own control, and increase this the shareholder value for all of us, because we're a significant shareholder in this.
I know you are, and that's brilliant to hear. And I do hope you have all that cash flow, because you've got 11 additional reservoirs to drill out into the bargain. So
well, that's on the top. If we can get to that, that would really be wonderful. But we've got a lot to do either way.
Yeah, indeed. I'm so pleased for you and your team, Colin, that you're really delivering the goods for the shareholders over here. And I'd like to thank you very much indeed for being my guest today.
Well, thank you as always. I love the conversations, and look forward to many more.
Great to see you. Today, my guest on the CEO interview at Core Finance has been Colin Harrington, the CEO of Zephyr Energy. My name is Malcolm Grahamwood. It's been great to be with you again, and looking forward to seeing you again soon. Bye now.